Hello traders, Gary Wagner here. It is 11:13 in Honolulu, 5:13 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 15th day of September 2023, and this is the Weekend Review. Traders, I am excited about the possibility, the potential that gold and silver have both found technical support and will trade to higher ground. That, of course, would trigger a buy signal from us early this week. Although we will not do a show on Monday, we will monitor the market here on Sunday as well as Monday for any indications and, if warranted, send out a trade alert. That being said, if you recall from about midweek, we began to discuss our current Elliott wave count, which looks at the cycle of the impulse stage, which really began in November of 2022. It started at approximately $1,730 and concluded at the highest value this year when gold traded well above $2,000 per ounce. We focused on the fact that we looked at a potential 5-count impulse cycle and then a corrective period of an A, B, C correction, which took us to about the middle of August when gold hit a low of $1,914 per ounce. We'll go ahead and blow up this chart because we want to focus on what we are looking at now. On Monday, this candle right here, we believe that there was a potential that gold would find support at the 61.8% Fibonacci retracement. However, on Tuesday, we had a solid price decline breaking below that point and actually having a low that came in closer to the 78% retracement than the 61% retracement. Then on Wednesday, we saw a decline that came in below, in terms of the intraday low, the 78.6% Fib retracement. And yesterday, we saw the lowest price point that gold had achieved since correcting from this high at $1,980. While the candle was green, it was a small-bodied candle. You could qualify it as a doji, the same as this, but there was no concrete technical evidence that a bottom was in place because of the fact that it hit a lower low and wasn't a strong up day in terms of the gain. That changed today. Today's activity, in which gold gained $13.40, which is a net gain of 0.7%. And when we look at the last 4 days of trading, we also can identify a strong variation of a 3-river morning star. The basic criteria for that pattern is it occurs after a price decline. That has been met. You get a large red candle followed by a star. A star is a real body that occurs below the red and subsequent large green candle, although in the case of this variation, there was in essence one star at the bottom, and if you combine these two candles together, you get a large red candle. That's why I'm labeling it a variation. And the fact that it occurred at the 78% Fib retracement, which, as I said, is an extremely deep but still acceptable level for a price correction, it gave us a solid indication that technical support had come into the market. Furthermore, if we convert our standard Japanese candlestick chart into a Henkin Ashi or Japanese average chart, we can see a defined color change from red as the market went to lower pricing to green. In the Henkin Ashi chart, you will always see a color change at the pivot point between bearish in this case to bullish or bullish to bearish. It also occurs during a choppy scenario where gold is either range bound or a correction or rally has not completed. That being said, we did get our first green candle here. When combined with the other technical indicators that we just mentioned, it is a solid indication that gold has found support at its current price point and More importantly, that it will move to higher values next week. With that in mind, we still need to have our confirming move or a confirmation candle to the 3 river morning star pattern that we just spoke about and identified as the final piece of information needed to trigger a buy signal. This has been Gary Wagner, wishing you as always good trading. We will talk to you next week for the next daily update and review. Have a great weekend. Bye-bye.